thanks for listening to the Adulting is Easy podcast, where we make adulting easier by making money easier. This is your host, Lauren. And I'm joined today by Paul Kromidas. Paul is the co-founder and CEO of Summer, pioneering a new approach to unlocking second and vacation home ownership. He's an accomplished operator and leader with over 10 years of experience growing and scaling teams across technology, real estate, finance, and strategy at Airbnb, Deloitte, Alfred, and Moody's. Prior to founding Summer, Paul was a product and strategy leader at Airbnb, where he led the integration of luxury retreats and the creation of the Airbnb Luxe product. Summer also happens to be the sponsor of today's episode. Your new vacation home is closer than you think. Thanks for joining me, Paul.
Thanks for having me, Lauren. It's a pleasure to be here.
Absolutely. So our goal for today is to make adulting easier for listeners by discussing a personal finance topic, since managing money is a big part of adulting. So today, Paul, we're going to talk, as we could probably tell from that bio, about short-term rentals. But I got to ask, since you worked at Airbnb, what was it like?
It's a good question. A lot of people ask it. I was there from early part of 2018 through 2020, and it was a very exciting time. Not just at Airbnb, but I think in technology in general, and startups. A lot of money flowing in the ecosystem. Definitely more surplus than there is today in the startup ecosystem. That being said, it was a pre-IPO company. We were pre-IPO at the time. I think a lot of exciting projects we were working on and sort of building, and very much this. There's a lot of rigor that comes with being a public company. And I'm sure Brian can probably talk better about that than I can. But we were. There was this idea, I think, at the time, that we wanted to own everything under the sun from travel, right? It was, from start to finish, from the time you think about going on a trip to coming back to your apartment and everywhere in between. You can, imagine what that might have entailed, but definitely no lack of imagination of what we wanted to work on at the time. We felt like the world was our oyster, so to speak. And, I think 2020 definitely changed a few perspectives, both internally and externally, in terms of how things shift, but it taught a lot of valuable lessons, both to I think the broader Airbnb team, and you can see how they've really focused and sharpened the product. And my hat's off to Brian and them in terms of what they've done since COVID hit. And I think even for myself, some of the lessons I learned through living through that process, both internally at Airbnb, and then being out and seeing what's happening in the broader economy.
So of course we got basically the entire world shut down. All these reservations were canceled. I had a host on who was supposed to had $1 million of reservations in Tokyo for the Tokyo 2020 Olympics, that came on and spoke with us, about a year or two ago. And so that was an interesting time. What do you think? Some is short term, though. What do you think the long term effects of COVID are going to be on the short term rental, vacational rental, seasonal rental, whatever you want to call that space?
Yeah. The big lesson I took away from the whole thing was travel doesn't stop. It was really interesting, right? Like I found myself, on a personal note, I live in New York City. I found myself spending a good chunk of 2020 in Florida at my mother-in-law's house. I did not think I'd be spending much chunk of 2020 in Florida, right? But I think many people have a similar story. They spent a lot of time in other places. And, I think what it taught us, and if you go back and look at the evolution of travel, people don't really stop traveling through recessions or through changes with COVID. Travel just ebbs and flows, and it adjusts, and it looks a little different. And what that meant in 2020 was, all of a sudden, a lot of the urban stays, the stays that had been the staple of Airbnb up until that point, when you think about what they were really living into, the density you get in being in an urban market, apartment buildings, things like that. All of a sudden, no one's staying in cities anymore. Everyone's fleeing to suburbs or fleeing to rural stays, and they're going from short weekend trips to long-term stays. The long-term stays becomes an increasing book of business, where people are staying 2, 3, 4 weeks in certain places, and all of a sudden those places are in demand, right? So what I think about is, if you're going to be doing anything at scale in the short-term rental space, one, you have to be focused on having a portfolio of some kind that can ebb and flow to meet those changes, right? You want a mix of rural and urban. You want a mix of long-term stays and short-term stays, the capacity to be able to do both and kind of ebb and flow to meet the demand where it is. And I think that's also reflected to the second part of your question on, how I see the space sort of evolving. I think it just increased the amount of interest from, the average person that I talk to. There's this healthy degree of curiosity. Airbnb came around in '08. They started the company. Most people at this point, I think the mid 2010s is when people really started to, identify and hear about this company, Airbnb, that was doing things in the space. And now there's VRBO and there's Booking and there's all these other players. And, everyone, my parents are in their 70s. I think they've even looked at Airbnb at this point. I think everyone's kind of done it. And there's this healthy degree of curiosity now where we're hitting a moment where the average person is really becoming curious about these assets and about real estate and the short-term rental space. They're not exactly sure how to get into it, but I think people think there's a way to make money here and there's a way to get into this. I'm just trying to figure out the right thing. So I think that's one thing I see is a healthy degree of curiosity amongst the general public in this space right now.
I can attest to that. We have 4 properties. Amongst those, there's 11 different short-term rental units. And so we do kind of rotate around our properties. So when we run into guests, they're asking us, do you own this? Did you do this remodel? Did you do this yard? What is it like? And they're all, and what I always found interesting is, until very recently, I had a full-time job. My husband still has a full-time job. They thought we were doing it full-time and like making crazy bank off of it. And so I kind of thought that was interesting. So I've noticed I've noticed the curiosity there. And then we of course will make good money, but we've been adding and expanding. And so, we're kind of always in startup, setup mode. So what are you seeing right now in the space? We covered, 2020. It seemed like 2021, we had kind of 2021 to some extent, 2022, this rebound, but what are you seeing out there right now in the market?
Well, I think you're definitely not seeing what you saw a couple of years ago, right? I think there's this article we were talking about, Lauren, and it got circulated a bunch to me and other people. I think the Wall Street Journal had it back in December, something around the Airbnbust, right? It turns out, a couple of people got excited. They went out and, bought properties during, COVID and threw some furniture in there and figured, hey, I'll just make some money and cover my debt and make a profit, right? And I think what a lot of people realize is it's a little harder than that. And you can probably test this as well, being an owner and operator for some of these. Like, it's a little harder than that to actually make money, especially in certain markets. Certain markets have just become oversaturated with supply. It's basic economics, supply and demand. And there are absolutely areas throughout the country right now where you can generate a significant return and make some money. And it's not even, a question. In other places, you could stand something up and you've really got to be the cream of the crop to be making any type of substantive returns, because there's just so much out there in terms of a supply where you have to be doing something different to try to catch the attention of a potential renter, right? When you're looking at a pool of vacation rentals that you can book yourself, like what are you standing out for? Is it consistency? Is it uniqueness of the experience? Is it certain amenities? Is it proximity to sites or things like that? There's a lot that goes into this that doesn't go into a traditional real estate purchase for most folks' primary residences. And that's sort of the black box, right? That's what people are dying to get access to and understand better. But there's certainly money to be made out there. You just need to know where to look and how to sort of hone in on it.
I'm glad you mentioned that. Basically, it's regional, and we see a lot. The real estate market is going to crash. That almost couldn't be more broad. We're not even talking about different asset classes at that point, and we're not even getting into the regionality of things. So what are some of those areas that you're seeing that might be saturated right now?
I think you look a lot in the Sun Belt, Phoenix, Arizona, some of these areas. You kind of have the perfect nexus of a lot of supply going up simultaneously, whether it's new builds, new construction. So obviously a lot of places throughout the country that have, the perfect storm where you've got lax or more friendly regulations towards new development and new construction. You've got more friendly regulations towards short-term rentals and Airbnbs. And combining that with at least what was one point a healthy amount of demand for some of these products, it kind of creates the perfect storm where a lot of people go out, they buy cheap apartments or cheap homes, they stand them up, they get them running, and kind of give a false signal to a lot of people in 21 around like, hey, this is an area where I can make some money because everyone's making money, right? but it's not a true predictor of whether you can actually make money, unless you can make money when the things are a little down like they are now. And I guess we really think about it from a, almost like you have a base case scenario, a bull case scenario, and a bear case scenario when you look at a property. And that accounts for the variance in economic cycles that none of us can predict. I can't predict that. You can't predict that. I don't even know if the Fed can predict it, right? But you have to be able to take a nuanced view of the property itself and what you think that home can do. And then you layer in your assumptions on whether the economy's up or the economy's down, because even the best properties will see, sometimes a little bit less if the belts are tightening, so to speak, in an economic cycle. And one other thing to note, I think quickly, that's an important distinction. It's important to sort of think about where you're tiering these homes in the marketplace as well, right? Certain areas are more geared towards bigger assets, bigger homes. These homes are more expensive, right? And those homes come with a larger monthly cost, clearly, in terms of a mortgage. Guess what? If you want to make that money back in that mortgage, you have to be renting that home out for more money on a per night basis. So now all of a sudden you're sort of thinking of yourself, am I in the short-term rental marketplace? Am I tiering myself in the luxury tier towards that customer? Am I tiering myself in sort of the upper middle tier, the comfort plus, if you want to call it that, or the business class of short-term rentals, right? Or am I tiering myself to just sort of standard marketplace or economy? It's very similar to how airline pricing works. I personally think that the sweet spot to be is sort of that business class comfort plus. You get a lot of people, tightening the belt, that are first class travelers, so to speak, luxury travelers who maybe don't have as much this year to spend. So they still take a nice vacation, but they're going to dip down a little bit. And then you have people stepping up for a nice occasion. Maybe it's a group of friends. Maybe it's a getaway with your loved one, a honeymoon, whatever it may be. They want to splurge a little bit more than just sort of four walls and a bed, right? I think that's where you see a lot of the consistent returns that let someone stand out in a lot of these areas.
Yeah, that's a good point. And I think to your point earlier about diversification too, I think you probably can, in some instances, own some and all of those different tiers. You can have the locational diversification, and you can have these different tiers. You can have different sizes. That's something that we've looked into for sure. We've got some comfort plus in these different areas. And I always have talked about and here in Florida, I have these kind of regional driving markets. It's not really, we have these ones outside of Tampa Bay. And so some people are flying into vacation, but a lot of times we get people that are driving from different areas. And I always think those people may not come in a recession, but the people that used to fly, maybe they will.
Yeah, it's really interesting. I think the driving customer is actually more interested. I think, at least we found in our business, more interested in being ultimately a potential buyer of one of these homes than a consistent renter. To your point, and that's some of the research we've dug into, about 75% of people who would potentially look to buy a vacation rental or an investment property or so on and so forth want that home within 3 to 4 hours driving distance. For a lot of the same reasons you probably look at having yours within driving distance, right? You want it to be easily accessible. If you spend any time there, if you have to do anything to it or get to it, it's not a flight away, right? About 25% are open to having it be, a flying destination that they buy in. But when it comes to actually renting those homes, clearly people are much more willing to travel around and fly to different places. And for anything they want, if they're going to be splurging on one vacation a year or 2 vacations a year because the economy's down and that's all they can afford that year. Yeah, you maybe want to be able to get away. If you live in Chicago, like taking one vacation a year, I want to be able to get to Florida, right? Maybe driving a couple hours in February isn't exactly where I want to go with my time. So you'll probably try to make that happen.
Absolutely. Yeah. Florida's definitely where you want to be in February. I can attest to that. So I get this question a lot about, I have 11 short-term rentals and 3 long-term rentals, and people kind of ask me, why is that? And I was just wondering if you could tell us, why you might prefer short-term rentals over long-term rentals.
Yeah, it's an interesting question. At its basic principle, and you look at both assets, and I think in the real estate industry, people get very bogged down in the nuances between the products and the assets themselves. At the end of the day, these are 4-walled residences, right? Whether they're condos, apartments, homes, and And typically, as long as they're legal to be utilized, they can be utilized for both long and short-term stays. Now, short-term stays at their core are, at least how Airbnb defines them, less than a month, right? It is up to a month long. It could be 2 weeks. It could be 3 weeks, right? However, it is inherently not something that someone is signing a month-long, 30-day lease for, or a 12-month lease, right? That is what is defined as a short-term rental. And inherently, through the pricing model, you can command more on a nightly basis for that short-term rental than you would be on a long-term rental in terms of it, just basic like days to dollars, right? If I took someone's, if you sign up for a 12-month lease on an apartment anywhere in the country and divided that 12-month payment, that monthly payment, by the 30 or 31 nights that you're spending, chances are that's actually going to look like a deal compared to what someone could earn in the short-term rental space every single night if that home were booked, right? And if that market had demand for a healthy short-term rental inventory. Now that's where the volatility comes in, right? In the short-term rental space, it's highly seasonal. It's highly seasonal based on the market itself and the weather, right? I'm in New York. Not too many people going out to the Hamptons in January, right? Even in Florida, not as much inventory wants to get booked in July and August in the Miami area, right? Like that's not exactly where people want to be. However, whether it's geared towards weather or events, there's Art Basel in Miami. There's the festival season out in the Coachella Valley in Joshua Tree and Palm Springs. Like you see these ebbs and flows, and you see the cyclicality, and there can be substantially more money made in those high seasons and in those peak seasons in the short-term rental space than you could command on the traditional 12-month lease. So ideally, if you're an owner operator of any of these assets, whether it's long or short-term rentals, you kind of want to be gearing towards an annualized return on the asset itself that feels right for you. And I don't know your personal situation with these properties, but I'm guessing you've probably done the math yourself and thought about, on these properties, the short-term rental play makes sense, and I can average that out over the year and be able to pay off my mortgage plus some and make money. And in other properties, it makes sense to have the long-term rental with a 12-month lease.
I actually have my long-term tenants as narcs. That's a joke, guys. But yeah, like I have like a duplex where one side's long term, and I have a 6 unit where two are long term, and they keep an eye on things for me. Make sure it doesn't get a little too rowdy. And also it does balance out that cash flow a little bit. And it gets to the point where if you have too many units in one place, I feel like I'm competing with myself. And I do also want to offer housing to some people, so.
It's a great point, right? You can there can be too much density, so to speak, in one area. Depending on how big that area is yourself, you could be, like you said, competing against yourself. You're also leaving yourself exposed potentially if you think like a portfolio manager. A great example would be if you had 50 homes and all homes were in Miami. Guess what? If a hurricane comes through and knocks out your entire portfolio, there you go, right? You do want to have a little bit of diversification if you really want to start leaning into real estate investing.
Absolutely. So are there any downsides to owning a vacation rental versus a long-term rental?
Yeah. I think to the point I made earlier, if you're buying the wrong asset and thinking that you're going to be able to make a bunch of money in the space, you can end up on the wrong side of one of these transactions. And maybe you have to figure something else out, whether it's, selling the property, changing to a long-term rental. But not every market is great for this asset class. I'll speak in terms that are familiar to me being up here in New York. There are a lot of commuter areas right outside of the city that are excellent areas to live in. A lot of areas in North Jersey, Westchester, very nice areas with nice, the suburbs, so to speak, nice homes, significant property values in these areas for long-term rentals, right? 12-month leases and sort of, people buying those homes and commuting into the city. But they are actually not great at all for short-term rental properties. Standing up a short-term rental in, Bergen County isn't really the move for a lot of people, because you have to be asking yourself, well, who's renting this? Is this a destination people want to be in and vacation in and spend time in? When you get into the short-term rental and gearing towards cash flow and that customer, you almost have to think like a hotel operator, right? There's hotels in every town throughout the country, even, these areas that I'm just mentioning that aren't great for short-term rental have, whether it's like a long-term stay hotel or just sort of your basic hotel. But the areas that they're not gearing up for vacation travel. They know they're not a destination for anyone's spring break or summer break or anything like that. And if you're going to be buying one of these properties, you have to be thinking about where that demand is really getting channeled to. Where am I going to be making that money? In these seasons to actually justify the expense of the purchase itself.
I talk a lot about that, where you have to really think about who your ideal guest is going to be, whether it families, is it business travelers? In my case, is it retired couples coming to Florida? Right? So.
A great niche. A lot of healthy demand, I'm sure.
No, yeah, definitely. Especially when there's no stairs.
Important consideration, all jokes aside, these are the things you have to be thinking about when you're really gearing towards your customer. It's a serious thing.
Exactly. No, it definitely is. What are you expecting? I know we don't have crystal ball, but what do you think the short-term market, short-term industry is going to have in store for us for the next year or two, or however long you want to guess?
Yeah, I think the longer the prediction, the more grandiose and less accurate typically. But I'd say, look, I think the broader economy, I'll speak in like big picture and kind of drill down. I think at a big picture level, I think a lot of us are hoping and thinking, that the job is done, so to speak, and, or close to being done from a Fed perspective, and interest rates are, probably not, in my opinion, going back down to where they were before this for a long time, if a very long time, let's put it that way. But I do think that, coming down from, where they are today, a couple percentage points is probably not too far in the future for a lot of people. So I think you'll see some of the normalization there, or stabilization. Inflation, looks like it's cooling off. I don't think you're going to see massive amounts of capital injected into the system again for a bit, but certainly at least won't be actively trying to withdraw capital, I think, from a regulatory big picture perspective. Now, how does that play a role in this space? So, I think you'll see any type of downturn that you saw the last year or so in some of the yields that these short-term rental properties will have. I think, you as an operator, you're now able to sort of establish, hey, I had a pretty nice bull case, back to what I was saying before, in 21, right? Like, best case scenario, everything's flowing, money's just robust and abundant in the ecosystem. Here's what I could be doing. Now I've got a pretty nice bear case to underwrite to as well, right? If you can kind of understand what these properties were doing over the last year, it's probably not going to get much worse than that, right? Or at least in that ballpark. So you can kind of, now you've got a top and a bottom to really underwrite and think through of like, well, if I can get something in that range, is that something that's going to work for me and work for my investment and for myself, right? But there will be a culling for sure. I think a lot of people, when you're underwriting only to that bull case scenario a few years ago, a lot of people are going to realize that, hey, maybe I made the wrong investment trying to chase alpha, trying to chase something here over the next few years. And I think you'll see a bit of a supply opening in terms of homes that are going up for sale or pivoting to 12-month rentals, because a lot of folks are learning the hard lesson that it's a little harder than just buying a home and throwing it up on Airbnb or VRBO and verbo making money. So I think all in all, that's a good thing, by the way. I would say one other thing we see a lot is on our platform, there's no shortage of demand. There's no shortage of people who are interested in buying homes or are very curious about the process and getting into it and sort of uncovering things. But there is not a ton of supply out there right now, just to buy in terms of inventory in the United States in terms of housing stock. I think a weird quirk on the situation that we're in is, at very high interest rates, everyone thinks, oh, prices are going to drop out. They're going to bottom out, right? You must be seeing rock bottom prices. Is anyone jumping on this stuff? And you're like, no, because that person that was going to sell is now pulling their home off the market because they're sitting there saying, well, if I sell this thing, now I've got to go find a mortgage somewhere for 6% myself. And where am I going to be buying? Right. So I think you've had some people just pull their homes off the market, or, a shortening of the supply window. And I think that would probably be all in a nice sort of culling of the ecosystem, so to speak, to kind of reset things here over the next, I'd say 12 to 18 months.
I agree. And I sort of wonder from the arbitrageurs perspective, if that's where we're going to see a good amount of the culling, the people who rent from long-term landlords and then become a short-term rental host in those units. I wonder what we're going to see there, because I wonder if they were, like you said, underwriting these bulk cases, and they have a pretty easy out. They don't even have to sell. They don't have to worry about the interest rate. They basically just have to sell their furniture. So I'm sort of curious about how that group's going to fare.
Yeah, no, it'll be interesting to watch for sure. There's a lot of changes that are afoot in the space, but I'm biased, but I'm clearly bullish on it. I think the space as a whole is rapidly evolving, and when you're looking for opportunities in real estate, there aren't too many asset classes, there aren't too many things that have been out there or that are new to the space. Most of this has been out there for 40, 50, 60 years, if not longer than that in some cases, right? And short-term rental is really a thing that I think this decade is sort of hitting the institutional radar as well. Like I think you will see over the next decade, a lot of the institutional money, some of these bigger real estate players are also getting curious about this. Because if your average mom and pop around the kitchen table is getting curious about this and reading about Airbnb and things like that, you can bet some of these big institutional players are also getting curious. And I think once those folks get involved, you'll really start to see a lot of proliferation and sort of edification in this industry around things going up.
That's a good point. So can you tell us a little bit, Paul, about Summer?
Yeah, happy to. So I, created Summer a couple of years ago, really based off of some of the learnings I had at Airbnb and just some of what I was seeing in the space. So, Airbnb is, and the short-term rental space as a whole really lacks quality supply, to the point I was making earlier. If you are a quality provider, you are in that top tier of short-term rental provider. If you have consistency in terms of the amenities you're bringing and the quality of the experience you're bringing, right? People are looking for some of that consistency in the experience, akin to what you get when you walk into a hotel. A lot of people want to know what they're getting beforehand. You can actually do pretty well for yourself in a lot of these cases, right? However, there's not a ton of ways for the average person to get out there and try to understand, well, what does it take to be one of these consistent cash flowing and yielding short-term rental properties? How do I stand with these things up? What makes that good home versus that bad home? What's a good market versus a poor market, right? How do you design it and furnish it to a certain aesthetic that's going to perform really well? What kind of amenities should I be thinking about in a market, right? No surprise, hot tubs tend to do well in ski towns, and pools tend to do well in Joshua Tree, right? But there's more to it than that. But that's certainly some of it. And then, there's the financing process of, okay, well, do I get a mortgage for this? And what does that look like? Do I have to put this much down, or maybe it's 25% down or 30% down, even with good credit for some people? Am I going to price it? Am I going to manage it? If I put this on one of these sites myself, am I the one sitting there responding to hosts or guests with check-ins and details and whatnot? Do I want to be doing that? Do I have a busy life and a busy job where I can afford to be driving that 3 hours? I'm in New York, driving upstate, for example, and changing linens. Do I get a cleaner? Like, there's just so much ambiguity when it comes to doing this for the average person. And I started thinking about, well, if there's a way to sort of productize that flow for a lot of these people, and make it easier and take the risk out of it, that's kind of where we step in. So we really target, sort of the average person, the middle upper class in a lot of cases. What's interesting about most people out there is, like, if you can afford a 20% down payment on one of these homes, then you can afford to do business with us. We try to make it really easy. So we've created this model where we help you find the right asset. We help guide you to a market, whatever your parameters are, we'll take those into account. We'll sort of shop with you. We have broker partners in each of our markets that we work with. We'll help identify the right assets. And that's some of the proprietary technology we really work on top of funnel to identify the assets that are going to yield pretty well for you versus others. We help you design and furnish those to an aesthetic that we know is going to perform really well and that we feel very confident in, is sort of repeatable throughout the country and throughout other homes. It's not going to be exactly the same as everyone else's home that comes through our platform, but of course, there's going to be some hallmarks of what we're trying to do from a brand perspective as well. That's, we help you finance that purchase, which I think for a lot of people is sort of one of the bigger steps in the process. We have a try before you buy model where you can put up 20% on the home, and we take care of the rest. We'll buy the home ourselves. You pay a flat monthly fee that equals your usage of the property. So if you say you're going to go 30 to 40 days, you pay a monthly payment that equals your usage of 30 to 40 days time in that home. You go whenever you want to go with no blackout dates. When you're not there, Summer rents out the home on Airbnb, Vrbo, and our own platform. You have up to 2 years to decide if you want to buy it back from us using the 20% you put down initially and half of all of the monthly payments that you made until that point. We add those up. In addition to the 20%, reduce your purchase price by that much. If you don't want to buy the home, that's fine too. You can actually take your 20% in full, no questions asked, at the end of your term and walk away. We will keep, however, the entirety of the monthly payments that you made until that point, because it's effectively the same as you having stayed in that home for 30 or 40 days on Airbnb or VRBO that year, Vrbo. The key difference here during the rent to own period is that when we own the home, Summer, and you are renting to own it, or you're trying it before you buy it here, we make the entirety of the short-term rental income on that purchase. That is how I cover my operating expenses, my debt service on the property that I bought for you, and make a profit. It's also a conversion mechanism for you as someone who's trying this home out before you're buying it. We enable you to we're not just telling you this is how we're going to do and this is what this home is going to perform like. We're actually showing that to you. We're showing you 6, 12, 18 months of track record on this home so you can understand that seasonality. You can understand how this asset is going to ebb and flow, when the right times are to stay there, when you want to stay there. And it lets you kind of like take a vacation into something and build up some type of purchase vehicle here where you can actually make a decision on that and see how that home's performing all the while. Now, once you actually buy the home outright, whether that's 1 month in, 6 months in, you can buy it at any point up to 24 months, that's when it shifts to a traditional property management agreement with us. Hopefully we've done our job and you've loved working with us and we love to continue to manage your property. And at that point, it's a revenue sharing model with us, where now you are participating in all that revenue that you saw us generating for the last year or 2 years. And we're gladly able to continue to manage your property and keep it on the Summer network. We also support people buying it outright themselves. Like I said, you can buy it at any point from outright or any point through that 2 year period. One last, I think, quick plug on the model that's I always forget and undersell. Those 30 days or 40 days that you want to take in the home, whatever it may be, you're really, I think what we strive to achieve here was create a way for people to actually own assets, own real estate, right? There's a lot of people that talk about, I can't get into something, or I live in New York, you can't buy anything for 400,000 in New York City. Like, it's as crazy as that sounds. You can buy a very nice home, 2 hours away upstate for that much money and with the 20% down and make a lot of money and go to it, 30, 60 days a year, whatever it may be. But, it's this acknowledgement that people want to own real estate. People want to own assets and they don't want to wait till they're 65 to do that. They want ways now and smart ways to do that now. But you can go and own this home and you can go for your 30 or 40 or 50 days a year. But with that time, you can spend most of it in your home. You can spend, 20 days a year in your home, and you could spend 10 days a year. Lauren, let's say you bought a home in the upstate here, and you could spend 10 days a year at my home somewhere else across the country, or someone else's home across the country. There's this ability, and a lot of our members get excited about other people bringing their homes to Summer or buying homes through Summer in other areas, because it gives them the opportunity to spend their time throughout this network of homes that are all high quality and all great performing homes. But you actually get to own a piece of that. You own one of these homes on this platform and can actually generate revenue from that. So we try to think through, make it the best of both worlds for people. You can stay everywhere and also actually own a singular asset and earn on that asset.
You guys have really thought of everything, it sounds like.
a lot of time and effort I spent on this business before we even raised any money or got customers. I spent a solid year just thinking through it and making sure it was right. So hopefully we let the product do its talking for itself.
Is there anything else you want to add before we wrap up?
No, just excited for the future of the space, and I think there's a lot of opportunity being created in the space for a lot of people, and I'm just excited that we can participate in it and hopefully, expose more people to it. There's a lot of joy that I think we're looking to create, and that can be created in this space, whether it's just time spent with your family, time spent with loved ones, and also the monetary side of it. Like that's the best of both worlds to me. Tell me something better than being able to spend time with loved ones and also earn a little extra on the side. That's the dream, right? So hopefully we can all participate in that here over the next few years.
And why don't you tell people how they can follow Summer and get in touch with you guys?
Yeah, you can check us out on our website, www.gosummer.com. We also have Twitter, Instagram, LinkedIn, all the social media handles at Start Summering. So you can follow us there.
I will put that in the show notes as well. And guys, you can follow me on Twitter at Adulting is Easy, on Instagram at Adulting is Easy Real, YouTube at Adulting is Easy. You can email me at realadultingiseasy@gmail.com. If you like this episode, you may also like episode 98 about a host turning an actual bank to a short-term rental. Thanks again for listening, everybody. Hopefully, Paul and I have made adulting a little easier for you.